Welcome back, everybody. Look who's here, Frank Napolitano. Frank and I decided that it's Black Sweater, White Shirt Day.
Total coincidence.
Black V-neck, white. You didn't see the show?
No, I didn't see the show before I drove in, but
right.
I think next time I'll look before I come in.
Well, I think it's fantastic.
It's kind of cute.
Yeah. Hey, it's something to watch for, right? There's some special offers out there that people need to think about.
There really are. I mean, some banks they've got some excess short-term funds. So what they do is they turn around, and they're great deals if they're going to meet your criteria. So if you've got a smaller mortgage that you're looking to pay off in the next couple of years, but some banks have a 2-year at 2.69. I've seen 3-year at 2.99, which is fantastic. If you can negotiate, that's great. But keep in mind that if you've got a longer term mortgage and you've still got 20, 25 years to pay off your mortgage, be very careful, because the question you have to ask yourself is, do you believe that rates will be lower or around the same when that maturity happens? So instead of taking a 5-year, where today you can get a 5-year at 3.29, would you sacrifice and take a 3-year 2.99 to have that small savings for that initial 3 years? But then what's the sacrifice you're making at the 3-year mark when your mortgage now comes up for maturity 2 years earlier than it should?
Yeah.
So
yeah, you may be right with people who can pay off a whole lot in a short time. It makes sense.
Yeah.
But there's so many good deals out there and good mortgages available for longer periods of time.
There really is. I mean, to get a 5-year at 3.29, I mean, that's the next 5 years of really not worrying about interest rates. Your payments will be set. Most customers that I'm meeting with today are coming off, over the last 5 years, 4.5%, 5% mortgages. So to get it down to 3.29 and keep the payment the way they've been accustomed to, because they've been comfortable with their lifestyle. So if they've been paying X amount, keep that same payment, even though you're taking the 3.29 and you're knocking 3, 4, 5 years off your mortgage. That makes sense.
Yeah.
But to get kind of teased into maybe taking a 2-year at 2.69, which would save you a little bit more, the risk you have to put in there is the fact that 2 years from now, when you come to renew, that rate could be 1.5% higher, and that's the risk you have to take by taking that shorter term.
The bank's doing this to attract new customers?
I think the banks have excess money, and I hate to think why they have the excess money, but I suspect some of the excess money is the fact that some people have paid the penalties to get out of the mortgages, and there's still 2 years left on it, so now they've got that 2-year money that they want to lend out. The banks have kind of already made their money on it because they've charged those absorbent penalties that we talk about often.
Right.
So therefore, they can afford to discount that rate a little bit more, because, well, they're looking to sell that money. So,
yeah, and watch out for those penalties too.
I think that's part of it. Yeah, you're right. I mean, watch those penalties. There are some.
You can be sucked in by the low interest rate and then realize the penalty and go, whoa.
Yeah. It may not be worth it to get out of an existing mortgage now to do that. But again, do the math, and if you're not sure of the math, certainly give us a call, and be more than happy to help you with that.
Good to see you, my friend.
Great to be here.
See you in a couple weeks.
We will.
All right. Have a nice trip.
Thank you.
Enjoy. We won't talk about the Steelers. We're not going to go there.
No, we won't.
No.
Tebow.
We'll not go there. Tebow time. You can actually kneel and pray at our shrine over here.
Right here.
Yeah. We'll take a break. Coming up on News Update more after this.